Hi, it's Mitch from Reverse Mortgage Pros, and in this video I'm going to talk to you about capital gains tax and reverse mortgages in Canada. Let's get started. Before I get into details, I offer free professional help with your reverse mortgage decision. Just hit the subscribe button below this video, hit the thumbs up button so you'll get more of my videos, more information, free content around reverse mortgages to help you decide if they're right for you. Now, as I do at the start of every video, I'm going to give you a quick overview, then jump into the details. So in 2024, the government introduced changes to capital gains taxes in Canada, and I've had messages from several people asking questions about the changes and how mortgages and reverse mortgages are impacted by these new rules. A lot of people are kind of worried about it. So in this video, I thought I'd walk you through changes, how they might impact you, any impacts on reverse mortgages, and give you the information you need so you don't need to be worried about this. Before I get started, as I like to do, I'm just going to quickly walk you through what is a reverse mortgage in 20 seconds. It's a mortgage for homeowners 55 and over that doesn't require any repayments. You can get around 10 to 55% of your home value depending on your age, property type, and location. You can take as much money as you qualify for, but any existing mortgage must be paid off first. And it's designed to help you tap into your home equity for retirement and to continue to live in your home forever. So in this video, I'm going to walk you through capital gains tax and reverse mortgages in Canada, just because of the new changes that came in, as I mentioned. So the impact of reverse mortgages is actually very straightforward and very simple. So reverse mortgages are only available on a home that's your principal residence. That is your main home that you live in. That's the only home you can get a reverse mortgage on in Canada. There have never been capital gains taxes on principal residences, and the new rules do not change this at all. So capital gains taxes do not apply to homes at your principal residence that you live in, or that you've lived in for your life. So the short version is there's absolutely nothing to be worried about with capital gains taxes on your principal residence. Therefore, there's no impact on reverse mortgages. There's no impact on your home that you live in at all. And I'm going to walk you through what it does impact so that to give you a little bit more information. But if that was the question that you had, an answer you were looking for, that is the answer. There's no impact at all to principal residence homes in Canada. So the question then is, who does this capital gains tax impact? Who do these changes impact? Well, they apply on the sale of homes that are not your primary residence that you live in. So for example, investment properties, cottages, any other property that you don't live in, second, third, or if you're lucky enough to own 4 or more homes, all those are subject to capital gains taxes, any property that you don't live in. In addition to this, having a mortgage on the property doesn't really make any difference to the capital gains tax calculation. It's the same whether or not you have a mortgage. And I'm going to give you some examples later in this video of what the capital gains tax looks like now versus in the past. So what has changed? Well, capital gains tax is always applied to homes that were not your primary residence in Canada. That's not changed at all. Recent changes are effectively just increasing the tax slightly by increasing the inclusion rate. And again, I'm going to give you examples and show you the changes because they're not as bad as most of the media, most people made them out to be. There are also increases in capital gains taxes for corporations, mainly targeting businesses which were kind of hiding profits from taxes, which is called tax avoidance, using the previous rules where they'd store all their investments in a corporation to avoid paying capital gains taxes. The changes are targeting people who are basically like avoiding paying tax by doing that. That's probably the biggest impact of these changes are to people that were doing this kind of tax avoidance scheme. So some examples of where capital gains taxes apply and some calculations. I'm going to walk you through some to make things easy. I've assumed that your personal tax rate is 30%. That's kind of like the overall tax rate you pay. That's probably pretty close to the average in Canada. I've included the capital gains taxes under the old rules as well as the new rules. And just to be clear again, capital gains taxes only apply at the point that you sell your home. So to pay a capital gains tax, you'd have to sell a home that is not your primary residence that you've lived in. So here's example number one. You own a home that you've lived in for 30 years. You bought it for 100,000 and you sell it for $1 million. Capital gains taxes are zero under the old rules and the new rules because there are no capital gains taxes on a home that you live in that's your primary residence. In this situation, you keep the full $1 million that you sold it for. This money would then be used to pay off any mortgage that you have. So reverse mortgage, any other mortgage from the $1 million that you sold it for. Pretty clear. You own the home, you live in it, no capital gains tax. Doesn't matter how much you buy or sell it for. Example 2, so let's say you own a cottage, which is a second home in addition to your main house, and you bought it for 750,000 and you sell it for 1 million. Well, capital gains taxes are actually zero under both the old rules and the new rules in this situation because there's no capital gains taxes where your profit or your gain is $250,000 or less. So in this situation, you would also keep the full 1 million, and that money again would be used to pay off any mortgage that you have on the cottage and second home. So you keep the full $1 million of sale in this situation too. Here's a third example, and this one is one where capital gains do apply. So let's say you own a cottage, it's your second home in addition to your main home, but this time you bought it for 500,000 and you sell it for $1 million. So capital gains taxes will apply to the 500,000 gain that you've made on the sale. So 1 million minus 500,000, you made 500,000 profits on that. Under the old rules, you would pay 37,500 in capital gains tax, which works out to be about 3.75% of the sale price. Under the new rules, you'll pay 49,500, which works out to be about 4.95% of the sale price. That's largely, as you can see from the calculation there, because the exclusion rate has gone up to 2/3 rather than half, which it was before. I'm not going to get into details around that, into details of tax calculations. That's not really relevant here. So instead of keeping 962,500 under the old rules, you'd keep 950,500 under the new rules, and then that money would be used to pay off any mortgage, which would include, which in this case doesn't include a reverse mortgage because you don't get reverse mortgages on second homes. Hopefully that makes sense. So as you can see, the actual percentage of the sale price you pay in capital gains tax is not that high. You're actually paying the government less than you pay your real estate agent, even under the new rules, at 4.95% of the home price in this situation. And here's another example, just to be clear as well. So let's say you own a cottage as your second home in addition to your main house, and you bought it for $1 million, you sell it for $1 million, there's no capital gains tax because you didn't make any money on the sale. You sold it for exactly what you paid for. There's no gain, there's no profit, so there's no capital gains tax. And in this situation, again, you keep the full $1 million, and that money could then be used to pay off any mortgage on that property, which wouldn't include a reverse mortgage because you can't get a reverse mortgage on a second home that's a cottage. So that's capital gains in a nutshell. So they do not apply to your primary residence where you live, so they don't really impact reverse mortgages or your reverse mortgage decision at all. And they're not a factor in any part of your decision making. Where you do own multiple homes, you may have to think about capital gains tax on any home you sell that isn't the one that you live in. So your second home, third home that you don't live in, capital gains tax might apply, but only if you're selling the home for more than $250,000 and you paid for it. And the increase from the new rules is actually only very minor and very slight to what you would have previously paid. So you're just paying a tiny bit more in capital gains tax than you would have before these new rules came in 2024. So again, they're not the crazy tax increase that the media is making it out to be, and they don't apply to 99% of Canadians that don't own second homes and don't run the business of corporations where they're hiding taxes. So if you're thinking about a reverse mortgage, you can get a free professional reverse mortgage assessment in 90 seconds. I'll advise if it's a good situation for you or something better works. All it takes is 90 seconds. Click the link in the video notes or go to reversemortgagepros.ca/assessment. That's reversemortgagepros.ca/assessment. It's no hard sales pitch, nothing like that. I'm just going to look at your situation and recommend what the best option is for you, and that's it. You won't ever hear from me. So if you have any questions or comments around capital gains tax, the new rules, impacts on mortgages, even if you want me to run some calculations for you, just leave it in the comment section below and I'll answer all your questions. Otherwise, I hope you found this useful, informative, and it helped clarify what's going on with capital gains taxes in Canada. Thanks.